deep dive into what's next, and perhaps most importantly, what should be next in the global energy transition journey. My name is Michelle Meinecke, and I'm the Director of the Energy Transition Dialogues at Gulf Intelligence. And I'm very glad to have three excellent speakers join me today. But before we delve into that, which is going to be the main topic of the day, it's a leapfrog moment for climate finance is the main question. I'm going to ask each of the speakers to give their opinion on the list. To start, very happy the Director of Energy Finance Studies at the Institute for Energy Economics and Financial Analysis. Welcome, Tim, and please tell us which story jumps out at you and why.
I think the ESG fund inflows hitting record highs is a really powerful theme, and maybe to broaden it, finance is very amoral. It's very much driven by self-interest. But the shifts we've seen in the last 6 to 12 months in finance has been staggering in terms of the 800% growth in inflows into ESG funds, the growth in the green bond market, the growth in the announcements by, I'm thinking, the 6 largest banks in America, all pledging trillion-dollar pledges to zero emissions fund flows in the next decade. Now, they're all the major funders of fossil fuels in the last decade, and the pledges we're seeing, even if they deliver half or a quarter of what they're saying, that finance will change everything. So I think that's probably the most powerful theme hitting the world in a very exciting year.
And we're also seeing a massive shift, aren't we, with ESG commitments and ESG success being linked much more to executive pay. I believe it's around half of the FTSE 100 companies are now doing that as a major consideration when it comes to pay deals for their executives. Again, that's a huge on-the-ground, tangible, real shift. Next up is Dr. Andreas Rickert. He is the CEO at Fineo. Andreas, thank you very much for joining us. What grabbed your eye today, please?
Yeah, hi, Michelle. Thanks for having me. And Tim, it was great that you picked the ESG highlight. And so I can build on that and saying I'm very pleased to see that impact investing is on the rise. So it's basically building an ESG. So when you see that ESG is on the rise, you're basically trying to avoid harm with your investments. And that's not enough. So we really also have a positive impact, and this is impact investing. So in a nutshell, that means that more and more people are willing, more and more investors are willing to contribute positively with their investments to solve the global issues. And so this is, I think, very good news. And I mean, we are talking here about the transition in the energy sector, but I would even broaden the scope and saying we are as a whole, as a society, as a world, we're in a transition phase, and we need to mobilize the finance industry to help building a new world.
Indeed, I'm very glad you asked about that because it's something I want to elaborate with you on shortly. So we'll pick up on that again. And last but certainly not least, Dr. Sasha Lafeld, the Head of Carbon Offset and Green Energy Services at Climate Partner. Hi, Sasha. Which story is jumping out at you in neon lights today?
Hi, Michelle. Thanks for having me. Since the other two speakers have picked a high or record high, I'm taking the one EU carbon prices. Hits record high. We are now above 50 euros. I mean, I'm picking this because I'm in the carbon markets, both in the compliance and voluntary carbon markets for 20 years now. And I mean, remember 3 years ago, the price was around 4-5-ish euros per ton. We're now 50. I mean, that is on the one hand side, I think a very good sign. Prices even need to be higher really to have an impact on industries really for fuel switch, etc. But so we are on the right way. On the one hand side, I think this is reflecting very much the upcoming legislation that we're seeing in the EU, but also kind of Paris Agreement and all regional legislations on climate and climate policies worldwide. On the other side, we are also seeing a lot of speculation come in and liquidity from hedge funds, etc., coming into this market, which I personally have my doubts about whether or not this is really adding value, because at the end of the day, we're talking about climate change and a huge global problem we have to solve. So this shouldn't rather be about hedge funds and speculation, I think. But at the end of the day, this record high, and I think we're going to see new record highs there, is a good sign to me.
Thanks very much for that, Sasha. Now, we're going to move on to the meat of the session, which is talking about climate finance and if it's leapfrogging. Now, I think we've already established through the comments that is the case. And Sasha, I just want to loop back around that with you. I used to cover the EU ETS and price the market on a daily basis. And when I used to do it, the feeling within the market would go from optimism that it's being done and we can overcome issues with CDM and the price can get higher and everything's going to be fine. And then the price would fall or it would jump between a few cents for a month or have you. It'd be very frustrating and the mood would plummet again. And of course, that's the case with every commodity market that's priced. But with the EU ETS, there was a certain sense of hope that was trying to be fulfilled. Do you think that the market has fully pushed beyond that now? It is a fully respected, credible market that's providing a template for other countries that are wishing to do cap and trade?
I mean, looking at the past 10 years, I mean, we've gone from bad to worse and back. So, I mean, all the scandals, the tax scandals and all that, tax evasion and so on. I mean, it was really horrible. As I said, I'm in this market for a long time and I'm rather in the voluntary carbon market, but I think that I'm very happy to see that this compliance carbon market seems to be picking up and that these kind of, these early development sicknesses and failures that were built into the system, I think that they're now finally, maybe not finally solved, but we are on a good way. And I truly believe that emissions trading, regional, but also global emissions trading can play an important role in coming to kind of cost-efficient climate action politics and policies. However, I think the last 10 years in Europe and also the Kyoto Protocol has shown that this is very difficult. I mean, emissions trading under the Kyoto Protocol has failed, full stop. I mean, it cannot be described in a different way, I think. So I truly believe in rather smaller emission cap and trade systems. Regional or countrywide cap and trade systems, I think that they can work much better. But having said this, obviously we still have the project-based mechanisms. I mean, we know from the Kyoto Protocol, and we now see the voluntary carbon market that is purely based on project-based standards, the gold standard, the verified carbon standard. This is really working now very well and is very much on the rise. It's robust because it has gone through 20 years of kind of criticism and development, actually standard development based on this criticism. So I have a good feeling, especially about this.
Indeed, and again, that used to be considered a much more niche market, the voluntary side of things, didn't it? And it was more on sideline. Now we're seeing that the overall market for carbon credits in the voluntary space could be worth upward of $50 billion by 2030. That's a completely different story. Andreas, I just want to loop back as well what you were saying about impact investing, and you gave us a brief description about how that is different to ESG and how it very much builds upon ESG. How do you see that market developing, or how do you think that market should develop in the next year also?
Yeah, so the market is developing very rapidly, so that's good news, but it's still small. Maybe just a brief look at the development we had so far. Just starting with the definition, I said that ESG, sustainable finance, usually tries to avoid harm. Impact investing is turning it into a positive impact. So that means you have the intention to have a positive impact and you have to measure it. At the same time, you also have to expect a financial return because we're not talking about philanthropy. So these are the key criteria when we are talking about impact investing. And when it started, and that roughly goes back 12 years ago when we had the G7 task force on impact investing, it was mainly driven by high net worth individuals, by family offices, means by private investors. And they mainly did investments into startups, social businesses, etc. So these were the targets and these were the investors. And we see that now it's really picking up pace and it's also moving into all the different asset classes. It's important to see that impact investing per se is not an asset class, it's an investment strategy. And we see that it's moving now in other targets. So we see it in the real estate industry. We see it in the industries we are talking about, energy industry, etc. So it's really moving in different areas. Also, we see already hedge funds, impact investing hedge funds, which I think is also an interesting venture now. At the same time, we see that other investor groups are also moving into this field. So when I said it started with high net worth individuals, with family offices, Then foundations came into the game, but also now the big players announced that they will massively move into the field of impact investing. So that means that institutional investors are now seeing that that's a huge opportunity, and that makes now, I think, very tangible that impact investing becomes mainstream. And that's good news. At the same time, we need it, because when we look at the issues we are facing globally, we are talking here about climate change, but all the other issues are also still there. So we have inequality, etc. So all the other things are there. We have to mobilize the finance industry, because problems cannot be solved by philanthropy and not by governmental spending. So we have to mobilize the finance industry, and this is what impact investing does. It leads the way to solve global issues with market instruments.
Indeed. I just have a quick question for you before we bring up the first survey question. In terms of global progress with impact investing and the awareness about the importance of it, which countries or perhaps even regions really stand out to you as ones to watch?
Yeah, it's a good question. Again, as we don't have a very strict definition, numbers are not that easy to compare. So when you look at the numbers which are announced, we see that the US and the UK are very far ahead. It also goes back to the fact that in particular in the UK, impact investing was very pushed by the political agenda. In other countries like in Germany, we were lacking behind, but also partially due to the fact that maybe we were not so bold to define impact investments where others used the term of impact investing. But nevertheless, I think that in particular, continental Europe can be one of the driving forces to really for the next phase of impact investing, because we have a long history of social markets. We have a long history of purpose-driven companies. And I see that the investors are willing to do more, but also that there are a lot of targets. So my belief is that continental Europe, the European Union, might be one of the hotspots for impact investing in the future.
Do you think that perhaps a database of greater transparency, greater reporting on this would help accelerate progress? Because if nobody's really sure exactly what's being done on a global basis, that also reduces the level of accountability that can be instilled into the process. Do you think that's something that's needed?
Yeah, it's needed, but it's already there. So the market is really developing. So just two examples. We have some very strong organizations like GIN, but the GSG on impact investing, etc., global organizations pushing that. At the same time, we also see that market standards are developing. I would like to refer to the Impact Management Project, where more than 1,000 organizations and companies have come together to agree on a general framework we are going to use when we are talking about impact investing. And that makes it easy also for institutional investors now to join forces with us, because now it's not only tailor-made, but really we see standards, and that is so important to really make it mainstream. So the industry is really developing.
In a year's time, we should be able to say, yes, XYZ countries are at the top of the list and XYZ countries are at the bottom of the list.
Exactly.
And get a really strong sense of where that range is as well. Brilliant. Thank you very much. Let's bring up that first survey question, please. This is going to be on the price of carbon. So I think roughly from the sense today, I know the answer, but we'll just see what comes through. Will progress to put a price on carbon, the assumption is globally here, but let's see, be achieved at COP later this year? So the reason we've asked this question, just a bit of background while you're putting your answers in there, and then we can loop back to this, is that obviously we're seeing a lot of businesses ramping up their requests again for attention on this, whether it's to put carbon tax down or whether it's to put cap and trade, whatever it may be, there's a much greater push on this. And we all know about the 2015 letter from some of the world's biggest energy companies asking for clarity. There hasn't been arguably that much progress since then as 6 years ago. So now we've got executives from oil companies, utilities, and some of the world's biggest companies and other industries as well, meeting with senators in the US this week to really push forward the carbon-free and dividend proposal. I think it was actually towards the end of last week as part of the Climate Leadership Council. And these include companies ExxonMobil, Ford, IBM, and other major companies. So just a bit of background for everybody who's on the speaker panel and everybody who's listening as well when they are answering that question. It'd be great to hear. Tim, what do you think the answer would be? Where would you peg your winnings on that question?
I'd say definitely yes, and it comes back to the point that Sasha made. The momentum was unbelievably tortuously slow for a decade, but in the last 2 years, it's been transformational. And I think carbon EU ETS, carbon prices, best performing commodity in the world for 2 years. But the word which is, or the phrase that's now in the press in Australia, and Australia, my country, is a global laggard when it comes to climate. We're one of the biggest fossil fuel exporters. The phrase that we are now absolutely, our politicians are fearing most is the carbon border adjustment mechanism. Now, that is how Europe puts onto the rest of the world the same pressures and climate impulse that they've done on their economy. I think it's brilliant. As a laggard, I mean, I want Australia to be a world leader. We will be a world leader. Our corporates and finance will move despite our government. But the carbon border adjustment mechanism is about dragging the laggards, whether they're China or Australia or Saudi Arabia or anyone, into a global solution for a global problem. And the most powerful rumors I'm hearing is that China, Japan, and or America are very, very seriously thinking about joining the EU in the carbon border adjustment mechanism. And that is that's game over in my view. We could actually solve the Paris Climate Agreement. We could possibly deliver what the world needs to deliver. And a year ago, we would have said that's impossible. So I think the carbon border adjustment mechanism is a phenomenal opportunity for the world, pushed by Europe.
Sasha, does that sound too good to be true? Because my spirit certainly lifts, when I hear that from Tim, I think, oh gosh, we could really do this. But at the same time, there's been a lot of that over the last 15 years. There's been a lot of, and then breathing, 2 steps forward, 4 steps back. Sasha, do you think that realistically this could be achieved and make Tim and I very happy?
I mean, I've been taking part in about 15 COPs, I think, over the last 20 years. So usually I came back with a depression because it was 99% lip service that I heard there, and there were really no real tangible results. Nothing really came out of it. I mean, the Paris Agreement is fine, but looking now 6 years later, so far, nothing or almost nothing has happened, but I'm totally in agreement with Tim. We have a momentum now, but I think to push this momentum further, this will not come from the UN level. I do not even expect a Paris rule book coming out of the next COP, actually, because I've seen so many COPs. Maybe I've seen too many. That's why I don't believe in it anymore. I'd rather believe exactly what Tim just said. The carbon border adjustment mechanism, certainly this is a regional, from the EU, a regional initiative that is really putting pressure on others. This might work. So it's coming from the regional or national levels, but it's not coming from this UN level, which doesn't have any sanctions whatsoever at all. And so I truly believe in these national and also regional frameworks to help solving the climate crisis. I'm also there. I'm a bit pessimistic, I have to say. I think we are far too late. I mean, it's good to see action finally now, but we're really far too late already. So last week we had a judgment of the Federal Constitutional Court here in Germany that said the climate policies here in Germany are not sufficient. They do not take into account sufficiently future generations. So policies need to change. The government needs to change this now, which is for the first time that we've seen something like this in an industrialized country. And there are further similar cases in other countries running with institutional courts. So I believe that this kind of pressure from national levels, this can make a difference.
It's going to be far more effective. Brilliant. Thank you. Can we please see the answer? Let's see. Hopes justified? Just. Only just. Okay. Andreas, what do you think about that answer? It's quite close.
Yeah, it's quite close. And yeah, obviously it reflects the people out there. And this also, I think, is a good sign, because even though we see good progress, we should not rest. We should not stop. We have to keep the pressure. And yes, Sasha, I agree. We are not fast enough. And all these things should have done many years ago. But nevertheless, now it's the time to keep the momentum. And you referred to the court we got last week here in Germany. I think that was remarkable. So that the politicians not only got pressure from the people, from the voters, but also from the judges so that we have to change things. And this, I think, is a good indicator, because if we really would like to see change, if we really would like to see the transmission into another world, then we need all the different stakeholders. And when we run through the different stakeholders, we see that we are coming out of the niche. So it is not just people like you doing lobbying for those topics for many, many years, but it's really common sense in society. So if you go on the street, talk to people, they see the urgency, they're willing to change and also to suffer to a certain degree and also to make compromises. So I think this is good, and we will see that reflected in the national elections, which are coming up in Germany in fall. And so we have the people, we have the politicians, we have now the judges, and finally, and this is also what we're talking about, the industry and the finance industry is following. So we have basically all the different stakeholders, and now we just have to orchestrate accordingly. And then we are not as quick as I was envisioning, but nevertheless, I'm quite optimistic that we can do the change.
I mean, orchestrate and incentivize, the big I word. We've got to incentivize the finance community to make it, to justify, and increasingly the economics relating to climate are bullish. Invest one, this is a very crude example, but invest $1 into the energy transition and you can generate up to $6 back. When it comes to accountants sitting in front of their balance sheets, especially in a post-COVID-19 world and economic recovery state, those numbers scream. They scream very, very loudly. And of course, we've seen renewables in some cases be far, far cheaper than traditional energy markets and fossil fuel energy markets. So it's all pushing towards the right direction. But as you say, just far, far too late. And of course, we've seen these net zero targets coming out in force in the last year, including from some of the world's biggest economies. That's still lacking in other regions, of course, and deafening silence at the moment. But we'll see if those pick up. But at the moment, just 17% of major companies in the energy, industrials, materials and transport sector, as well as consumer goods and services, have business plans aligned with a warming pathway that would cap temperatures this century to that 2 degrees that we all have, again, flashing in neon lights. Tim, I'd be really keen to know from you, what is needed, what's next to support the financial community and to incentivize that financial community, say for the rest of this year? What could be done as a low-hanging fruit to get them more and more on board?
Yeah, what's going through my mind right now is the connection that we have, the opportunity, and I accept exactly the perspective. We've had a decade or at least 5 years of wasted opportunity post-Paris, but it's a bit like the financial markets. They'll ignore an issue until they realize we're hitting the tipping point, and then they move almost overnight. And I say that, I was with Citigroup for 17 years. Financial markets are phenomenally powerful when they move. And I think we're at that tipping point. So finance is aligned, but the other powerful tipping point we're at is, can you imagine, we've got consensus almost between President Biden, President Xi from China, we've got Modi from India, we've got Moon Jae-in from Korea, we've got Suga from Japan, we've even got Putin. We've actually got global alignment going into this COP, and it's all about a technology race. The reality is self-interest in economics and finance, as you said, have all now finally aligned, maybe belatedly, but I'm an optimist, an eternal optimist. But the reality is this year is transformational. And when finance sees that inevitability, it will move on a dime. So I'll call out greenwash, no problem. But when firms like Larry Fink, BlackRock's Larry Fink talks about the inevitability and the massive once-in-a-lifetime opportunity, not risk, opportunity climate change presents for BlackRock, an $8.6 trillion giant. That's the beginning of the end. We're on the home straight, so I'm a bull.
Indeed, and when you have the world's biggest oil exporter, Saudi Arabia, very publicly speaking about wanting to transition to a renewable economy, but just not renewable, green hydrogen at the center of it, and trying to forge relationships with Germany, Japan, and elsewhere to completely overhaul the entire energy ecosystem and not clinging on to that last barrel of oil past 2050 as eagerly as they possibly can. Again, that is a huge sign in this picture. Just before we go to the last question, because we're running short on time, Andreas, I'd just be keen to know, is anything jumping out at you from this financial picture of what's needed in the next 8 months to really make 2021 and especially an extraordinarily standout year. It already is, but to really put that cherry on top of the cake when it comes to climate finance.
Yeah, I mean, I have to say, I deeply believe in market powers, and we see that they are currently really trying to pick up pace. At the same time, we still need also regulatory efforts to really push that trend. And so I'm asking the finance industry to do it voluntary and to see the opportunities. At the same time, we need the governments, in particular, not only national governments, but also international agreements to pave the road and to define what are the circumstances. And we are talking about, of course, carbon price, but we can also talk about subsidies for new industries, etc. So we also need governmental efforts to really push the change now.
Excellent, thank you. Let's bring up that last survey question, please. It's an easy question. It's only got two options. So MENA's plan, we're just going to going regionally now for Gulf Intelligence. MENA's plan for $250 billion of renewable energy by 2025 is a strong start, or is it still not enough? We're asking this. Apicorp's Energy Investment Outlook report released. It's a great report. It's got a huge amount of detail, and I'd recommend anybody grabbing a coffee to have a quick read. And this is the number that's in there. And this is what we're really keen to find out what you think, because we're seeing general economic bounce back. MENA region is expected to rebound by 4% in 2021 compared to its 3.4% contraction last year for very, very obvious reasons. And the pertinent question now is, how sustainable can this recovery be? And is that $250 billion going to be enough? Now, we haven't given very long for answers, but please can we show them, because we're getting towards the end and I'd be really keen to see what ends up. Excellent. So a lot of optimism there. Fantastic. Sasha, do you think that's justified? Sasha, are you there?
I mean, it's a bold number, 250 billion. Obviously, to be very honest, I don't know whether this is enough. I mean, looking at the size of other markets, like I'm a carbon dude, so I can I always refer to the carbon world. I think looking at this 250 billion there and looking at the sizes of the voluntary carbon market, for example, this is a big number. So to me, seems to be okay as a start. Let's see how far it will take us.
Tim, what do you think?
Yeah, I'm reminded of the solar tender that we saw last month, only 2 weeks ago, down 20% year on year to a world record low of $10.40 per megawatt hour. Okay, does it have some subsidies in there? Is it replicable immediately today? No, but it's the direction. It's a comparable year-on-year comparison from another Gulf state, down 20%. Global deflation in solar is now just running so fast. India down 18% year-on-year last year. Portugal down 23% year-on-year last year. Comparable apples and apples comparison. Solar deflation. It's in the Middle East's interest to actually be a world leader in solar. And I think the Middle East totally understands that now. They can be a world leader in this like they have been in oil. Indeed,
it's passing the torch, and with solar, wind, green hydrogen increasingly, and also hydro projects as well are beginning to pick up. Andreas, we're running out of time, so please will you do us the honor of giving us the final comment? What is your opinion on that survey result?
Yeah, I think it's a good start, and maybe link it to one of the news from the beginning. So it was said that the carbon cut doesn't mean that jobs will go away. Yes, that's true, but jobs will change. So we have to also finance the transition, the change of industry. And as Tim said very rightly, we can see the SDGs as a threat, as a challenge. We can see it as an opportunity at the same time. I prefer the second, but we have to finance to really capture the opportunities, and for that money is needed.
And especially considering the MENA region at times has had the world's largest youth population that's been unemployed, and still does on and off now, depending on which data points you want to look at. So job creation is especially important, especially as the region's population, like everywhere, is going to be surging up to 2050. Brilliant. Thank you very much. I think there's still a lot of meat. I suspect we could carry on for another 30 minutes, but that's it. Thank you very much, Andreas. Thank you very much, Tim. Thank you very much, Sasha. Wishing you all a good weekend ahead, and hope you can join us again soon.
Thank you.
Thank you.